Good morning and welcome to the Detroit Regional Chamber's Restart webinar. We are honored and just grateful to have Thomas Alongi and Ali
Butcher.
Ali Baydoun from UHY Advisors. They're coming to you today to provide a wealth of information on the latest financial relief programs for your business. Now we have a chat box over on the side where we're asking that you submit your questions. There's going to be a lot of information shared today. So if we don't get to your questions, we're definitely going to download them and the team will answer those and get back with you. So I will now turn it over to Tom and we will begin the webinar. Thank you.
Great. Thank you, Marnita. Thank you so much. And thank you for joining us this morning. We have a lot of information to go through. We won't be able to tackle all of it in great detail. So you will find that our slides have a lot of information on them, and we will make those available to you, and hopefully that'll help guide you. Some of this early information that we are going to be discussing as far as PPP I and PPP II, it's a little bit like a melting ice cream cone. I mean, applications are already rolling pretty heavy on PPP II. And Ali, maybe you can just move to that next slide for me.
Yeah. Okay,
well. Overall, what we want to discuss really is, we're going to talk a little bit briefly on PPP I and PPP II. Spend a little more time on the employee retention credit. We think that's, there's more opportunity there, and I think, we see that, companies are missing that a little bit. We'll touch on shuttered venue operator grants also as we move through. And we'll give you some tips and a little advice on some of the forgiveness that we've been going through with clients on, going through PPP Round 1 forgiveness. Next slide there. This obviously, with the new bill that was passed, there's about $287 million that's been allocated to PPP II, and the rest to this, other programs. So ideally, this is there looks like a lot of money, but it's going to go very quickly, and so that's why we're really pushing for everyone that has not applied and is eligible to do so as soon as possible, really. And just to give you some facts, this was PPP Round 1, right? So 525 million. You take out what's going to happen in Round 2, which is loans less than 2 million. So you take out the last two rows, which is a little more than $100 million. That leaves you with around $420 million of potential eligible PPP Round 1 that could be eligible for PPP Round 2, right? Tongue twister, for sure. So now there's $287 million allocated. So this is going to go pretty quickly, and that's what we think. Overall, the demand seems to be pretty steady. We've seen some articles that it's down, but I think it's down because we've taken some of the exception rules out and loans over $2 million. So it will shrink, obviously, the overall picture there. But this demand is gonna be very quick, and we're gonna make sure that you have all the information that you need if you are eligible, to make sure you're able to apply as soon as possible. Just a few updates on, next slide, Ali. Just a few quick updates on PPP Round 1. We've, out there, we've seen a couple that have come to us and, haven't applied. And, hey, we want to make sure, if you haven't and you're eligible, you want to make sure you're taking advantage of this program for sure. And there's been, a new eligibility as far as 501c6s, chambers of commerce, real estate boards, as you can see, others that have become eligible under this new round of kind of the reopening of the PPP I. So you have to, you can't apply for PPP II unless you have applied and used PPP Round 1 funds. You don't have to have forgiveness, but you will have to have used those funds prior to applying for PPP II. So there's a lot to go through. I mean, Ali is really one of our resident experts on the staff here. Can't thank him enough. He's going to run through. I'm going to interject as we move through PPP II and onto the ERC, and I will watch these questions. We'll try to get to them. Obviously, we have a lot of information to get through. So again, thank you for joining us. Ali?
Thank you, Tom, and good morning, everyone. As Tom mentioned, we're going to have a lot of information. We're going to start with PPP II. Really, the way we wanted to structure this presentation is more so of a comparative approach. Here's what was available for PPP I, and kind of a refresher on PPP I, since that's still now allowable. I'm going to touch base on a couple of points there that are important for PPP I and what has changed for PPP II, so that you can get a feel for, okay, was I eligible for one? Why am I not eligible for two? Or how do I get eligible for two? And so to kind of start there, let's talk about eligibility in general. For PPP I, it was available for companies in general who had less than 500 employees, but also it was eligible for companies who were designated as a small business concern. So this highlighted term in there, this is a specific term that was available and defined by the Small Business Act, that essentially allowed companies that have more than 500 employees to use alternative tests that are available for them through the SBA to still qualify for these loans. Some of them had revenue tests, and some of them had higher employee thresholds than the 500. Also, PPP I is available for 501c3s as well. What PPP II did is essentially now it's limiting it to simply business concerns. So as you can see, there's not the reference of this small, and that makes a big difference, because without it being available to the small business concerns, those alternative tests that were once available to multiple industries are no longer available. So now for PPP II, really it's only available for companies who have less than 300 employees. And so one of the questions that we get is, well, how do I measure my employees? So the employee is essentially, it's based on the previous completed 12 calendar months that you have. It's the average of that head count that the SBA technically looks at, and it counts full-time employees, part-time employees. They even go to the extent of counting temp employees as well, or employees that you use through leasing or PEOs. So really you're looking essentially at your 2020 to see if you had less than 300 employees, and then if you do, then you should be meeting that first criteria. Important to note that a lot of this is on what we call an affiliated basis. So if you own multiple companies, you are aggregating those numbers together, and you're looking at those together to see if you qualify essentially for the group as a whole, or you don't. We have got companies that might have foreign ownerships. You count your foreign employees in this stuff, so you might get tripped up that way. So the second criteria, which wasn't available in loan one, is now you have to also demonstrate that you had a reduction in gross receipts of 25% at least. And the way you look at that is in one of two ways. You can look at it on an annual basis. If you meet it on an annual basis, you qualify. Or if you don't, you can look at it on a quarterly basis. And as long as you meet it for one quarter in 2020 compared to 2019, then you essentially qualify. We're going to spend some time going through a definition of gross receipts and how that works, but essentially all you need is one quarter. It could be quarter 1, 2, 3, or 4, and essentially now you've met it. So 300 or less, 25% at least drop in any quarter, and you should be meeting the first couple of thresholds that are available. In terms of other items that are important as well is, as Tom mentioned, the entities have to be have used their PPP. You have to have gotten a PPP I, and you have to have used your PPP I by the time you receive your PPP II. the rules don't mention anything about having to be forgiven for PPP1, having to have applied for forgiveness. But what we are seeing from a practical perspective is that loans that have not forgiven seems to have a glitch. The bankers are having a hard time uploading to the SBA portals. Those are known issues. They will be addressed. But the law and the rules themselves don't require you to be forgiven. But as with everything, we see that these things from a practical perspective, that's what's happening. So keep that in mind for anybody who hasn't applied for forgiveness. That might cause some delays. But legally, you should be eligible even though you didn't apply for forgiveness, as long as you can prove that you've spent the money for PPP1, which, given that all of those were dispersed by August, I think, of last year, you should by now be able to comfortably prove that that money has since been spent. Businesses have to be in existence as of February 15th, 2020, and the business cannot have essentially permanently closed to go for a PPP round 2. Those are the kind of the major qualifiers. Here's a list. Just because of time, we have a lot of information. I won't go through it all in detail, but the slides will be available. There's, if you're involved in lobbying, there's other disqualifiers out there that you need to be aware of. But the one thing that I'm going to point out is this highlighted sentence. Entities that are going to go for the Shuttered Venue Operator Grant program, you can't go for that grant program if you get a PPP Round 2 or a PPP Round 1 now. The initial PPP Round 1 does not disqualify you, but if you go for one round, you will be disqualified. So keep that in mind, because once we get to those slides, if somebody fits in that criteria, that program might be more beneficial than PPP 2. So you might want to pause and wait for that program, because I think you might be able to get more money there than you would under this program. So that's the one item that I want to highlight here. But when you get the slides, feel free to just read this and see if any of this is applicable to your company and might disqualify you. Tom, you're on mute.
One quick question. Looks like on the employee tests here, I think it's a good one. My company has 50 employees, but we are owned by a foreign company that has 2,000 employees out of the U.S. Does my company qualify? And I would think under the affiliation rules, I would say that answer would be under the current PPP II would not.
Correct. Yeah, foreign affiliation rules come into play, and FAQs as well as the general guidance of SBA clearly say that you would count the employees of foreign affiliates into the equation. So those employees would have to be considered when considering whether you're eligible or not. And under that fact circumstances, I think that pushes you out of it.
Correct. If they have direct control, meets those affiliation rules. Correct.
Correct.
Sorry.
So
thanks.
Yep. In terms of gross receipts, so the definition of gross receipts is essentially all income that a company has received pretty much from any source. And what's unique is it says it's in accordance with the entity's accounting method. The rules themselves don't really define, which accounting method to use. Some clients use, you have your GAAP financial statements, you have tax books that might have different accounting methods when it comes to revenue, say cash basis and accrual basis. The rules seem to suggest that all of these definitions follow the IRS. So the suggestion there is that it's tax basis what's being followed. However, it seems like a general consensus that you can use, internal financial statements as well as GAAP. But the rules seem to be leaning towards the tax definitions. That's further supported by the fact that if you look at documentation, which we're going to get to in a second, they reference, you can submit tax returns, right? So obviously they're using the stuff that's on the tax return to validate this stuff. So those would be kind of the methodology if you have methodologies that are different. If you only use tax, you should be fine. But we're seeing that accepted, just general financial statements are also being accepted. Gross receipts are also measured on an affiliated basis. So the same rule that applies for employee and how you would count those, you have to apply on the gross receipts. So if you have two companies, one is down but the other one is up, you got to count them together. And then you essentially, if the total of the two doesn't show at least a 25% reduction, you unfortunately are not eligible for those companies. So just keep that in mind. Now, what's not included in gross receipts? That would be any type of tax that you collect, like a trust tax. So sales tax, for example, that's not part of your gross receipts. So, that type of stuff. But also, because you're doing things on an affiliated basis, proceeds of transactions between the companies that are affiliates also are eliminated. So if you have two companies that are selling to each other, you can eliminate that intercompany sale when you're looking objectively at what your gross receipts look like. So essentially, those are items to consider. And the biggest thing is your forgiveness of PPP I, which is eventually going to be an income event for you on your financial statement, is not considered a gross receipt. So that way, that forgiveness, that PPP I that you've received doesn't trip you up from being eligible and doesn't count against you from a gross receipt perspective. One item that I want to clarify before I get to cover period on gross receipts, in case this event is applicable to somebody. If you weren't in business for all of 2019, there's going to be special rules about how you benchmark. So they essentially say that if you weren't in business all of 2019, you can compare any quarter that you were in business in 2020 to the quarters that you were in business in 2019. So if you started in Q2, you start with Q2, Q3, Q4, and you can compare to any quarter. So any quarter, you're no longer kind of committed to doing same quarters in terms of this. It's interesting to see how that shakes up because the application doesn't seem to suggest the ability to do that. If you look at just the application, they ask for specific reference quarters, but the rules do give you that flexibility to do so. What is not clear on that front, unfortunately, is what if my business started, for example, midway through a quarter? How do I go about? Because obviously that quarter is going to show very low sales. If I only have 1 month out of 3 that I'm comparing to 3 months, there really is absolutely no guidance on how you would look at that. And if that's the only quarter that would, have qualified you, I don't know if a reasonable kind of allocation would come into play, but the SBA has not issued any guidance on that. So in terms of covered period, I don't think there's any material change here. The first draw, as you remember, originally had an 8-week covered period. The Flexibility Act that was passed in June extended that to 24 weeks. Then, some rules came out and said, well, you can apply for forgiveness at any time, including before the end of your covered period, which essentially suggests that you can use any period of time that's, up to 24 weeks. The rules now kind of seem to cement that definition. Your covered period is a covered period that's no less than 8 weeks and no more than 24 weeks. And your start date of your covered period is still the date that you've received your fund disbursement. So you can use, anything from 8 all the way up to 24 in terms of a cover period for a PPP Round 2, or if you didn't get PPP Round 1 and now you're going for that, you can, use the same definition for that PPP. The calculation, again, this is one that was that kind of remained similar. The original loan was 2.5 times average monthly payroll cost. Payroll cost had a special definition. As a refresher, that was cash compensation paid to employees, capped at a prorated amount of no more than 100,000, health insurance, employee retirement benefit match, as well as state unemployment taxes. That's what went into that. For PPP Round 2, they've kept that same definition. It's 2.5 times monthly average payroll cost. You could use 2019 or the trailing 12 month, which effectively would be 2020 now, or as you go along, if you think that's more beneficial, you kind of keep rolling forward. Obviously because of the pandemic, we're seeing that most companies are more advantageous remaining and using 2019 payroll information. What has changed though is companies who have a NAICS code that is starting with 72, those are your hospitality companies, restaurants, hotels, that type of stuff, actually are now afforded a 3.5 time multiple rather than a 2.5 time multiple. So obviously these are very hard hit industries. And so the SBA and Congress has recognized that and has given them an extra turn on payroll that they can borrow. The other substantial change is the first loan was limited to $10 million. This loan has a maximum amount of $2 million attached to it. So that's the maximum that that could be received. All right, allowed expenses. So this has been a big advantageous one also, because they've added some more categories of allowed expenses that can now be utilized, or the PPP for which can be utilized. And we're going to go into the definition of each one of these. But essentially, initial PPP, you could use it on your rent, your mortgage interest. You could use it on interest of other indebtedness, but that wasn't qualifying for forgiveness. And then ultimately, you could use it on utilities. And of course, you could use it on payroll cost. You had to use at least 60% of your loan on payroll cost and 40% on the non-payroll cost items for PPP 1. Same applies for PPP 2, with the exception that now non-payroll costs include 4 more categories that you can use it on: property damage cost, operation expenditures, supplier cost, and worker protection and expenditures. But you still have to use at least 60% of your PPP on payroll if you want to qualify for full forgiveness, and then 40% could be attributable to these costs. And that's going to be very important once we get to the discussion of the employee retention credit and how that interplays with the PPP. And for those who haven't applied for forgiveness yet, you can leverage these expenses. There's been 3 new applications that have been posted on the Treasury website for forgiveness that now have incorporated these particular items in them. So if you haven't gone for forgiveness and you were short, or you think this could be advantageous, just consider these expenses and see if they fit. Hopefully that can help you out a little bit. So let's go into the definition of what these new categories are. Covered operation expenditures. This is really payment for software that is being used to help run your business, essentially. So it's any software, cloud computing, that is helping you with processing payments, payroll, sales, billing functions. So that's your accounting system, your ERP system, your customer relationship management system. So those type of systems that you might have either on a license basis or on a subscription basis, you can include those costs now are eligible for forgiveness. Covered property damage cost, that's in essence, that was damage cost that was due to the public disturbances that have occurred and that haven't been covered by insurance. If you had to repair something, you haven't been covered by insurance, you can now kind of get quote unquote reimbursed by using PPP money for those expenses. Covered supplier cost, that's a big one, but that's also one that we kind of need some guidance from the SBA, because it's very advantageous but also limited. And this is essentially any supplier good that is deemed to be essential for the operation. So for companies, say manufacturers, this would be raw materials, so any good, and it's only for goods. So it doesn't seem to go to services. You can't use it on contractors. It's really the purchase of materials. But the issue with the definition is it has to be made pursuant to a contract, order, or a purchase order that's in effect at any time before the covered period, right? So that makes it very tough to understand, well, how do I qualify for this if I don't have, for orders that I'm placing during the covered period, If you think of any other category that's out there, that is for money that you spend during the covered period. Now, most of them have, like your leases, had to have, okay, it's a lease agreement that you were in before February 15th. Service for utilities, it was, service that you were receiving before February 15th, 2020 for it to be eligible. Well, this seems to limit it to contracts, purchase orders, and stuff like that. That has to be in place before the covered period. So, we really need some guidance from the SBA to understand, well, if I'm buying stuff, but I don't really have a contract, right? And I don't have a PO, it's just, I have a vendor and, I order stuff. Is that stuff gonna qualify? If you read it literally, the answer is more likely not, but then you wonder, well, what's the purpose then? And then for perishable goods, again, something for the restaurant industry. See, for these ones, they say that it's at any time during the covered period, right? So, so that distinction is going to be interesting. We'll see if they issue any guidance on it. the sentiment is not a whole lot of guidance is going to be issued on these PPP II, but I hope that at least they get some clarifying points on some of these items that are still a little bit out there to be defined. And then the last piece is your worker protection expenditure. So think of this as anything that you've done to adapt your facilities to be more COVID safe and COVID friendly, and to be more compliant with laws and regulations of the Department of Health and Human Services, CDC, and OSHA. Tom, is there a question?
Well, yeah, I don't want to interrupt. Now we're coming to kind of the end of the PPP. Do you want to answer any questions now, or we can wait till the end? I have a few questions for you.
I mean, if you think they fit here, I think I'd rather probably tackle them here and during the conference.
Yeah, just because they're kind of related to PPP. Let me just hold on one second. Is it true that PPP II, there's no longer an alternative payroll covered period? How do you handle payroll periods that straddle the date when the loan is obtained?
I don't know that there's no addressing that there is no specific alternative covered period for forgiveness, but the forgiveness rules seem to be consistent PPP I to PPP II. So I'd assume that same kind of methodology of how you apply your alternative cover period is still available for PPP II.
We agree. Yep, I agree. Couple of these I did answer. What documents, this is a good one, what documents will we need to submit to prove 25% decrease in gross receipts? You touched on it.
Yep. And we have some slides that we're going to get to that's going to talk about documentation, but in general, the rule is it seems to be very fluid. They say if you're using annual, you can submit annual tax returns. Obviously, people don't have their 2020 tax returns done. The ones that we've applied for, we've used internal financial statements.
Correct.
They have to be signed by an officer of the company, essentially. Yes. Just attesting to their accuracy by signing them. And that's pretty much what we've used, and that's been acceptable on some loans that have been approved. Other than that, they give you even the option to use bank statements, although I don't know how you'd qualify revenue through a bank statement. You'd have to do some reconciliations that are supported, in my opinion.
Right.
But at the minimum, if you have internal financial statements that you can run comparative quarter over quarter and show the decrease, those have generally been acceptable.
Yeah, I think that's important to make sure that those anything you submit is signed.
Yep.
Any backup information. So I think the other ones I think I did respond to. So I think we can move on then.
All right. We're just going to touch a little bit on this certification. As you recall, this was a big thing in the first one where you're certifying that the current economic uncertainty makes this loan necessary to support ongoing operations. This certification is on PPP II applications. I think it should be considered when applying for that. You should consider, if you're, for example, you're leveraging first quarter is really what was down 25%, but your business has rebounded significantly well for the year. And now you're still going strong. You need to make sure you consider the certification and whether you're going to be eligible to get this. So just because you have one quarter that dropped and you're less than 300 employees, you're still certifying that you really need this money. And so just keep that in mind. We've seen some companies that have improved actually during the pandemic and have had record years for whatever reason. They didn't struggle. So those are items that just keep in mind. I know there was a safe harbor that this certification would be considered to have been made in good faith for those who had loans under 2 million. It's unclear whether this will apply here because every loan will be under 2 million. And as a reminder, that safe harbor essentially is just that you've made it in good faith. It doesn't mean that the SBA is saying you automatically qualify for it. It just says that you made it in good faith. Hence, if you didn't really qualify for it, you will have to pay back your loan, but they probably won't pursue fraud charges of you, knowingly not making a certification in good faith. So I would strongly recommend, if the companies have not struggled that they get very comfortable with how they document this certification before applying for PPP II. Simplified application for forgiveness. So this has been two big talks, right? Under 150. Finally, they did it. Application that's under 150, it's been released now by the SBA. It's the same 3508S that was available the first round, but that was limited to under 50. Now it's now under 150, and essentially, if you're under 150, you can fill out just one pager. You don't really have to provide a lot of supporting documents to support your forgiveness, and you can submit that to the SBA. It doesn't mean that you automatically are qualified for forgiveness. You still have to run the calculations. You still have to make sure you meet the forgiveness requirements. It just means that you can do it on a simpler form and not have to provide all that data to the SBA. But it does not make sure, just want to be clear, not every loan under 150 is now automatically forgiven. So make sure you still run your accurate calculations. You have the support. The SBA can ask for it at any time. So we're going to talk about some other provisions that came through the Act that also have been beneficial, or just make you aware of them. Benefits. So as we talked, payroll costs include health insurance. Initially, it wasn't clear how much of those benefits are includable. Now it's clear. They now allow you to include dental, vision, group life, and disability insurance. So anything that comes from any kind of a benefit package is now includable in case that helps with forgiveness. This is a big one, the safe harbor. So this was the safe harbor that was available that essentially said, hey, if you had a drop in headcount, as long as you were back by December 31st to the same level of employees that you had on February 15, 2020, even though you had these reductions that could influence your forgiveness, we're gonna ignore those reductions. So we're gonna deem that those are not applicable to you because you were able to restore your employee headcount. For the first PPP round, you had all the way to December 31st, 2020 to be able to restore those headcounts. Obviously, these being now issued in 2021, they've moved that date for the new loans. So anything that's going to get, PPP 1 or 2 that are going to be issued now, and they've now made that date the end of the cover period. So for anybody who is receiving dates now, if they've had reduction in employees, they have all the way to the end of the cover period, which could be up to 6 months from you getting, or 24 weeks from you getting the loan, to really restore those headcounts and hopefully not have those reductions applied to you. As far as just general, the forgiveness seems to be still pretty much similar. The reference periods are still the same that you did for PPP 1. Those were either January through February of 2020 or February 15th through June 30th, 2019, to kind of benchmark if you had a reduction in headcount. That did not change, so you're still doing those same measurements that you did really on PPP 1 forgiveness. So when you're considering how that would impact your PPP 2 forgiveness. The biggest thing, in my opinion, that came is that forgiveness amounts, while they weren't taxable, the IRS took the position that the deductions of wages or other expenses paid for by PPP money, which was essentially deemed tax-exempt money, are not allowable. They've since rectified that. That's a huge for this, essentially, and they said that you can't deny any deductibility of expenses. So now not only is the income not taxable, but the actual deductions do stand. So that's going to help tremendously from a tax planning perspective for all borrowers. A couple of things that affect PPP 1, which are important. This is mainly for partnerships that may have not, essentially gotten the full amount the first round, or folks who did not really accept the full amount, even though they were eligible for it. You can go back and get an increase up to that maximum amount. Partnerships, for example, there was confusion on whether self-employment income would count. It does count. If you didn't use it the first round, you can go back and get more money on your PPP 1 the second round. However, you can only do that if you haven't applied for forgiveness. So if you've been forgiven, kind of you unfortunately do not qualify for that. Seasonal employers, now they have a definition of seasonal employers, and essentially it's anybody who hasn't earned more than 1/3 of its receipt in 6 months. And essentially, seasonal employers can use any 12-week period to calculate their average payroll cost that they would then apply the 2.5 multiple to between February 15th, 19, and 20. And they are also that a group of qualifiers that, hey, you can go back for PPP1. So if you use the period that really wasn't very advantageous to you, you kind of can change to a different 12-week period and get a higher number using these updated rules, essentially. And then I think the last kind of few points is that idle grants are no longer going to reduce forgiveness amounts. Initially, those idle grants that came, if you applied for an idle loan, you could receive up to $10,000 in a grant. Your forgiveness amount on PPP was reduced by that $10,000 grant, because they're saying, hey, you already got a grant on the other side, so at least you have to pay that back. Now that's no longer the case. For those who have received forgiveness, the SBA issued a procedural notice that said that they're going to take care of it automatically, and then moving forward, it shouldn't be the case. For those who haven't received idle grants, they've been, or idle loans also, they've been extended now to December 31st, 2021. So these are disaster loans, and every time they qualify something as a disaster, COVID pandemics have been one of the things that would make you eligible for them. So if this fits in your criteria, now you have to December 31st, 2021 to apply for those loans. The grants are going to take a little bit longer than the first go around to be granted. Now the SBA has 21 days instead of the original 3 days to review the application and decide whether you are qualified for a grant or not. So documentation, we talked a little bit about that. Essentially, one of the key items is if you're going to the same lender and using your 2019 payroll, which is what you use on your first round, so essentially you're borrowing the exact same amount as you did the first time, you're not supposed to have to provide payroll information. I will tell you from a practical perspective, that has not been the case with all lenders. Some lenders are abiding by this rule, other lenders are asking for everything. So make sure that you just have that information available. It should be exactly the same information that you've supplied for PPP1 and how you applied for it. For loans that are over 150,000, we talked about the need to justify the revenue reduction through income statements or other forms that you might have available. For loans under 150, they say that you don't really have to support the revenue reduction at the time of the application, but at the least you have to be able to do it by the time you go for forgiveness or when the SBA asks for it, if earlier. So our recommendation is you have to do it anyways. Do it now. Make sure there's no question that you qualify, and submit it with your application so you don't have to worry about losing on a technicality down the road. So that's pretty much it for PPP II. We want to spend, I know we have about 8 minutes, and then we'd love to answer some questions that might be coming. So we're going to spend some time talking about employee retention credits and the shuttered grant operators, because as Tom mentioned, this is a great area that is going to provide a lot of benefit, hopefully, for clients that qualify. So.
Yeah, correct. Let's roll into this. I'm trying to answer some of the questions that are coming through as best we can. Won't be able to get to all of them. We have quite a few coming in, but the ERC is very, very important. So I think there's a lot of opportunity. Make sure you don't miss this one.
So employee retention credit. The reason why this didn't get a lot of press the first time around is this credit was not available for those who got PPP. So everybody went for PPP money, and everybody ignored this credit. It was a tough credit anyways. But the new law changed that retroactively, essentially. That said, hey, no, we're not going to disqualify you from being eligible for this credit. If you did get a PPP, the only thing we'll do is you cannot use the same wages to get this credit that you've essentially paid for using PPP money. That's the only qualifier or overlap with PPP. And I'll give some suggestions on a move forward basis on how you can leverage that a little bit. So who qualifies? There's rules for 2020 as well for 2021. So let's give you a little overview on the credit. The credit is 50% of qualified wages, which includes cash compensation plus employee share or the employee-employer share of health insurance. And it's capped to $5,000 per employee. So it's 50% technically of the first 10 grand of wages per employee that you have is how you would calculate this credit. And essentially, it goes on your Form 941s. It offsets the employer share of Social Security, and the excess is refundable. So in essence, this is all refundable money for you. Now, who qualifies? For 2020, you have to meet either you were fully or partially suspended because of the act, so anybody who's deemed non-essential, or you've experienced significant decline in gross receipts, which they define that as 50% during a particular quarter compared to the same quarter in 2019. Okay. Now the key is, the way it works is you have to drop 50% in that quarter qualifies. Then the quarter right after qualifies, and you stay qualified until the quarter that's after the one that gets to 80%, right? So essentially, if Q2 was 50% low, you qualify for Q2 and Q3. You look at Q3 and you say, well, I'm still at 70% of my revenue, so I didn't go over that 80% threshold. That means Q4 qualifies, so you can qualify for all 3 quarters. But remember, it's 50% of the first 10 grand of wages per employee for the whole year. So it's not a quarterly calculation. If you use the first bullet, like you were, hey, I was suspended for a month, only the wages during that suspension period would qualify. And keep in mind, you can't use wages that are paid for by PPP to use for this credit. So we're seeing a lot of clients that can potentially qualify for this that are receiving significant amount of money. So it's very important to measure your gross receipts for the full year, quarter over quarter. See if you were down. If you're down 50%, should definitely be considering talking to somebody about whether this is something you would qualify for or not. It's going to be a lot of money for a lot of people. 2021 changes made this even more lucrative. So now it's available for first and second quarter of 2021. Instead of 50%, now you get 70% of the first 10 grand of wages. So that's 7 grand per employee potentially. And instead of the caps being $10,000 per employee for the whole year, now it's per quarter. So essentially you can get 70% for that employee for Q1, and then another 70% of their wages for Q2 if you are eligible. Third is you only have to prove a 20% reduction in wages quarter over quarter, and you benchmark 2021 to 2019, not 2020. So again, you're going back to a year where COVID wasn't an issue, and you only have to prove a 20% reduction. Still, you can't use the same money that you are going to pay for using PPP money. So for those who are going to get PPP II, for example, you gotta monitor those wages. And then essentially the other big thing is for 2020, if you were over 100 employees, full-time equivalents essentially in 2019, you can only use up qualified wages for those employees who you furloughed but you were still paying. They couldn't work. So not a whole lot of people really have that situation where they were just paying employees that were at home without not actually working or being able to telework. So really, it's the critical people that get it and benefit from it are those who had less than 100 employee in 2020 if they meet the other criteria. Well, for 2021, they raised the 100 to now 500 employees. So more people are going to qualify for this in 2021. So this is going to be a tremendous amount of money, I think, for companies. Make sure you're really trying to take advantage of this. And in essence, that's kind of how the employee retention credit. One of the tips that I'll give you is if you haven't gone for forgiveness, historically we've gone for forgiveness with payroll money only because it was simpler. Banks like it. It's easy to prove. You're done. Because now you don't want to kind of claim that you used all of your payroll PPP money on payroll, you might want to take the time to fill out the application and leverage at least 40% on those other categories to limit the amount that would be attributable to payroll. So that way you don't hurt your chances of qualifying for this credit should you meet the other eligibility criteria. So just a little bit of a change. If you've already applied for forgiveness, there's not much that you can do, but at least moving forward for round 2, you hopefully can leverage and maximize this credit. And our last piece is Shuttered Venue Operator Grants. So this is a new grant that the SBA will be administrating directly. It's going to be like the idle loans. You have to go through the SBA. There's actually a web page on their website that talks about this. They don't accept applications yet, but this is for essentially entities that meet certain definitions, such as live performing venues, theatrical producers, museum operators, motion theater operators, and talent representatives. And essentially, same almost rule as the PPP. You have to show that you can demonstrate a drop in 25% and reduction in revenue for quarter 19 to a quarter in 2020. The entities have to have been in business as of February 29th, 2020. And you essentially get a grant. We're going to go through kind of the calculation, and you can be also eligible for a additional second draw as well, like in a supplemental grant that could be up to 50% of the first grant that you receive. Again, not available if you got a PPP 1 or 2 after December 27th. So that's why it's important to see if you qualify for this, for the reasons that I'm just going to cover in this next slide. So in terms of amounts, the calculation for this is 45% of gross earned revenue of the individual entities for essentially 2019. So you really can get almost 45% of your revenue compared to 2.5 times your monthly average payroll. So as you can imagine, if you fit in those criteria, you'd hope that 45% of your revenue is a lot higher number than 2.5 times payroll. And then essentially it's maxed at 10 million. So PPP II maxed at 2 million. This is maxed at 10 million, right? And because you can get a supplemental grant that is 50% of the first draw, if you do qualify for that one, now you can almost get up to 70% of your revenue, really. So a company that's a $10 million company can get potentially 7 million under this, whereas PPP might only get you 1 million, right? So you really need to make sure you analyze if you fit. The definitions of those criteria are very specific, so you got to make sure you meet that definition. But if you do, I think that this program is going to be more lucrative. Now, it's not yet available, and it will be staggered because they want to make sure the money gets to the people that are been hurt the most. So the first 14 days are going to be for those, like, for example, that are down 90% in revenue, right? The second 14 days is if you're down 70% in revenue. And after that, it opens to everybody. So there's going to be still some window before you can actually get this money, assuming that you can sustain and you don't really need PPP II immediately today. This might be an avenue that would be more lucrative for you. So we want to make sure you're aware of it before you go and apply for PPP II and disqualify yourself from something that could yield a better result. With that, at our slide deck, you'll have a resource, just a couple of places where you can go get some information. You got Tom and myself's contacts as well. So I know we went through a lot and went through it fast, but I still have 45 minutes. So
You nailed it. Yeah. And I've been busy here trying to answer as many questions as I could. I know those questions are very important to people, and trying to get to them as many as we can. We have a couple minutes. I know we're a little bit over. One just came in here. Sarah, do restaurants qualify for Shuttered Grant?
No. No, restaurants don't fit in the definition of any of the criteria that. So for a restaurant, you're more likely going to go for PPP II, and you get 3.5 times.
It's actually, probably more beneficial. Does gross receipts include grants received? I don't.
Yes, so like regular, the question is
grant.
regular grants. If it's regular grants, then yes. I think the only exclusion that's currently out there is PPP and idle grants don't count. But if you got something like from your, local county or something like that, I think those would count.
Yeah. I think I was following up on my question about PPP when I had 0 sales in 2019, am I required to use Q1 20 as my base for showing the 25% reduction?
Sorry, can you say that one more time, Tom?
Yep. I had 0 sales in 2019. Am I required to use Q1 2020 as my base for showing 25% reduction?
Yeah, if you weren't in business in 2019 and started business first quarter of 2020, you'd have to have been in business before February 15th, 2020, essentially. But yes, you would use then Q1 and compare that to any of the subsequent quarters.
And then I think we somewhat covered, how do you apply for the employee retention credit?
So mainly the employee retention credit is running through your 941s. So you'd have to run the calculation and get in contact with your payroll providers, and they would need to amend those 941s. We're still waiting on IRS guidance on, the law seems to suggest that you can push it all to fourth quarter, but the IRS hasn't issued any guidance on that. So at a bare minimum, you'd have to go and amend the quarterly 941s. But payroll providers are being, are keeping up on this. But you have to do it, and you have to kind of do it by employee to provide them the breakdown, and then they should be able to claim it for you.
Correct. Let's see. I think
we'll, for answering questions that we haven't answered,
yep.
We can, we're gonna get hopefully an export, and we'll try to address those as best as we can, essentially.
We'll get one last one here. I think it looks like restaurants were limited capacity for all 2020 for employee retention credit apply for all quarters of 2020.
Yeah, so like restaurants would be a perfect fit for that, because that partially suspended, because you're suspended by law, essentially. Then yeah, that's the kind of the definition of partially suspended, and you would be eligible for all 4 quarters. And then you got to see, how much PPP did you receive and how that interacts with the wages that you paid. But in theory, you should be eligible for those quarters that you were partially shut down. Yes.
Any ones that we didn't get to, we will try to address afterwards. But again, I know it's a lot of information. We hope it was helpful. And again, thank you everyone for joining us this morning.
Hi, I'm back again from the chamber just to wrap up today's discussion. Thank you so much, Ali and Tom, for this wealth of information. As Tom said, we will be downloading the questions that did not get answered, and we'll get them over to Tom and Ali so they can answer and get back with you. I thank you for attending and for your time, and you'll receive an email from me with a link to today's discussion. I also ask you to please visit our website at detroitchamber.com/COVID for upcoming Restart Michigan webinars and our other events that are related to restarting your business and COVID relief. I ask that you all stay safe and well, and wish you all the best and have a good day. Thanks again, Tom. Thanks, Ali.
Thank you.
Thank you for having us.
Bye.
Thank you so much.
Yep. Bye-bye.